Hey everybody, welcome to a special episode of No Vacancy Live. I've got the incredible Bruce Ford, SVP of Lodging Econometrics here. Bruce, so great to see you, buddy.
Glenn, welcome to 2023.
Yeah. It's so great to see you. It's our first time getting together this year. Well, we saw each other at Alice, but
we did, but we didn't converse.
I know. I know.
Today we shall converse.
Today we are, but before the conversing begins, I want to thank our good friends over at Avgo, that's AAVGO.com, for sponsoring today's podcast. Of course, you already know them as a premier company putting in amazing check-in kiosks in your hotel, ones that actually someone can talk to, a human being, on a screen, so that people aren't left alone. You can still have somebody working at night, even if you don't have anyone working that late night shift. They're there for you. Go check them out at avgo.com. That's AAVGO.com. All right, Bruce, I think that's a pretty cool thing, but also you're seeing lots of stuff going on with the construction pipeline, eh?
Well, Glenn, people are still building hotels.
Right.
Not a newsflash there. But most of what's happening is those hotels that have been under construction and under delay due to a number of issues are really the ones that are going to open. But the starts have slowed a little bit. And that's a natural thing that has happened during kind of a change in the economic cycle, if you will. External economic factors, I like to say, that have come into play over the past 6 to 9 months. And some of those are, very well known, but interest rates is number one, supply chain was number two, but really number three was kind of the insistence of the brands.
Right.
Be really beginning to come into play, and them saying, well, it's kind of time to put up or shut up to the owners and management companies. You want to keep this flag. We're not going to accept these low quality scores anymore. And they're out inspecting all of the hotels kind of post-pandemic now. So and we still do have to call it post-pandemic, right? The government hasn't officially said that the pandemic is over.
I believe everything ends this coming month.
Okay, so it's the end of March, so we're right there.
Like that. I don't know the exact day, but something like that.
Well, isn't it more that it would kind of, as they say in politics, sunset?
Yes,
won't renew it.
It would expire. Yeah,
okay,
that sort of thing. So, Bruce, your three issues are really salient, but for folks out there that may not understand, rising interest rates may be making it more expensive for people to go ahead and build
when
hotels.
You buy real estate, okay, the cost of the money that you have to borrow to buy that real estate is an impact on the math problem, if you will. Okay. When you build new hotels, just like with purchasing an existing hotel that has a balance sheet and operating performance, you're borrowing money. Okay. So in the height of the best times pre-pandemic, you were able to borrow money to build a hotel in the 4 to 5% range, some cases a little bit better. Okay, with a reasonable down payment. Okay, but a lot of those rates have changed to 2.5 to 3.5 points higher, and the down payments have increased. So, quote, the contribution you need to make to get the hotel off the ground has changed dramatically.
Right.
Plus, construction costs have gone up a lot as a result of the cost of raw materials, but also the cost of getting those materials and those products to the hotel has continued to increase. Now, supply chain, out there, I've heard a lot of things that tell me that has kind of subsided.
I've heard that too from a lot of people, but then I also hear it hasn't.
The cost of the containers has dramatically dropped.
Right.
Okay.
I mean, that was up to like 20 grand a container or something like that.
Correct.
When it used to be 3,000 or something.
That is pretty clear. The cost of the container issue coming from China has been relieved, if you will. But many manufacturers, sought to manufacture things in other places when China became a little bit challenging.
Right.
So they're now manufacturing in Vietnam is very popular, as well as several other countries where they've sought other or alternative manufacturing locations, and they now have inventory available. So in some cases, in the hotel business, we always have a roadblock or a speed bump, if you will. And most people think that when I'm importing stuff, it's coming from China. And when I tell you today, in terms of importing things from Asia, that's not necessarily true. there are other places where you can import product from with a high quality manufacturing facility that can come from somewhere that isn't China.
Right.
And you can get it to the West Coast of the United States, and you can get it on a truck, and you can get it across the country to wherever it is that you're installing it.
I know I'm a little weird, but I've been watching stuff on YouTube about container ships, right? And it's interesting that like they'll leave Beijing and then go to like Singapore and do a whole other pickup.
Yep.
So theoretically, all these containers could be coming from the other countries, meeting in Singapore, and then they go on to either the West Coast of the United States or like Rotterdam or something like that.
Sure. I would guarantee that happens. Now, Glenn, I'm pretty sure your kids aren't 6 anymore, so you are strange.
Yeah.
You're watching container ships float.
Well, there's a new container ship that carries like 21,000 containers. It was pretty cool to see how that ship operates. I'm sorry.
Yeah.
I'm a geek that way.
You are a geek. All right. Glenn's a geek.
All right.
We're on.
All right. So now that we've figured that out.
What has happened is, as a result of difficulty borrowing money or cost of borrowing money increasing, appetite to begin new construction challenged. So what do you do with the cash that you have on hand? Because owners and management companies are not broke.
Right.
Okay. At this point, they've come out the other side of the pandemic, and their operating performance is at or better than 2019 at this point in many cases.
Right.
Okay.
And again, that's not necessarily counting some urban cores that rely on some meetings.
But they're getting ready. They're getting ready for that to be the case, because the core meetings properties, it was amazing. And one of the things I'll talk about while we're here at the event this week is,
and we're here for the California Lodging Investment Conference.
Yeah. While we're at the event, you'll be blown away how many rooms are under renovation and conversion in San Diego. Okay, San Diego is one of the busier convention markets across the country for that kind of leisure convention. You know,
I mean, who doesn't want to stay a couple extra days?
It's a beautiful destination, and the entire city's under renovation, Glenn. It's like 25,000 rooms. It's crazy. And that's a direct that it absolutely speaks to the core of the meetings business is coming back, and the hotels that service that meetings business are getting ready for that return of demand and that return of those customers to see their occupancy pop back up. Now, San Diego did okay during the pandemic. It certainly did better than a city like Boston, certainly did better than a city like San Francisco or Seattle. But that next bump of occupancy and that next bump of meeting rate and room night demand is key.
So I was up in Boston last week speaking to a group, the International Live Events Association. And while I had data that was saying that Boston was still going to be lagging in 2024, one of two cities that still would be compared to pre-pandemic, people on the ground that are booking these events said they're doing great. Like they are booking a ton of events, and they all were like looking at me like I was crazy.
Well, Boston is lagging because performance over the past 12 to 18 months has not been great. Okay. And Boston has, even pre-pandemic, even when I came into the business 20 years ago, Boston was a 9-month-a-year city.
Yeah.
And those 3 months a year when it snowed or when it wasn't that pleasant to be there, it just didn't do well. And that's kind of changed in our lifetime in the hotel business. It's not necessarily weather centric. If we're going to Boston, we're not worried about whether it's going to snow or not.
Right.
Okay. We kind of committed to Boston. It's a tech event center. It's there's so many more hotels right around that convention center now. If we're going to a cold weather environment, we're okay with that. And so it's changed a little bit from a 9-month-a-year city to a 12-month-a-year city. So that makes a huge difference. But Boston also, with all the kids being back at the colleges and the schools doing very well. And of course, there's from a Boston fan, there's a great amount of sports entertainment awesomeness going on in the city.
I don't know anything about that.
The Celtics have the best record. The Bruins have the best record. Sports, baby.
Yeah.
And of course, the Boston Marathon is coming quick here. So, Boston has a lot to offer. It was a little befuddling to me why it was, so beaten down, if you will. But there were a number of big hotels that were closed in the city for a couple of years.
Yeah.
And so, That's just a shift in supply. There's some great new openings that are happening in Boston, and it's exciting. And of course, I live a little north of Boston, so I'm probably partial to that. But, Glenn, even you can look, to look at the demand, the cruise markets are huge.
Yeah.
Okay. Fort Lauderdale and Miami ripping it up.
Port Canaveral is now a bigger cruise departure destination than Miami.
Yeah. So those cruise markets, they're full. There's no more restrictions on who can come on. You don't have to be vaccinated. Now, there is still a restriction about entering the United States if you're not vaccinated, right? Because Novak Djokovic, a tennis star, has to petition the government to be able to come into America to play in the United States on the tour because he's not vaccinated. So I'm not sure everybody knows that, but if you can produce a vaccination card, even if it was a year ago that you got at least a shot or two for COVID, you can come into America now. And the Americans traveling internationally, of course, the vaccination requirement has been lifted in many countries. The U.S. has a pretty strict requirement, as does China. Okay. But the Chinese travelers are allowed to leave the country again. And the impact that that's going to have in travel in Asia is going to be incredible.
Yeah, it should be really good. But I would think some of those folks might make their way over here to California. And since we're, we talked a little bit about San Diego, but since we're here for California Lodging Investment Conference, and we'll be broadcasting from here during that event, what are some of the other things that you're seeing about the overall state of the hospitality market in terms of new construction?
So the pipeline is not shrinking. Okay. It's just not starting. So there are projects.
So what does that mean?
So it means there are projects that are announced that are coming into the pipeline.
It's not in the dirt yet.
That are entering the pipeline, but the timeline to get those underway is still a little bit undetermined as a result of understanding when the lending window is truly going to open again.
Right.
So I think we'll hear quite a bit about that. We certainly heard quite a bit about it at Alice. But the theory is that should settle down by the middle of this year. Okay. And when I say the middle, that could be anywhere between June and September. Okay.
Right.
So,
so you're doing the definition of what Disney does when they open a ride in spring. They really mean it maybe end of June.
Right. After Easter.
Yeah.
That kind of thing. But additionally, it's also really about, with the new construction, there's a ton of new brands too. And many of these new brands are seeking new construction projects. So they're signing projects. We can use the Eco brand by Wyndham as a good example of that. We can use Everhome by Choice as also a good example of that. These new brands are looking for new construction sites, and they're actively going after those sites, and they're actively signing them up. Now the construction starts again. They're not coming at the rate that we would typically see, but this is cyclically common. So if I'm painting the cycle for you, if you're watching on video, we are just creeping off the bottom. Okay. So I'm not using the word recovered. I'm using the word we are still in recovery.
Right.
Okay. So we won't be recovered, okay, until the summertime comes along and we kick the crap out of the numbers from last year and kick the crap out of the numbers from 2019. And then maybe we'll say recovered.
Right.
And on our way from there. But new construction lending has to be open. The interest rates have to settle down for us to really say recovered. But I think travel demand is in a really good space right now.
It seems to be. And a lot of the CEOs of the major corporations in the recently ended earnings period all seem to be saying that and reflecting that sentiment.
I concur. I listened to all of those. And I think we're even still going to have some more new brands this year.
No.
Can you believe it? But this is an evolution. People talk about, wow, geez, we need all these new brands. Actually, we need to retire a few probably. But the point is
Would
that
you name them all right now?
I'm not sure that's going to help you sell the show, Glenn. But at the end of the day, extended stay is very hot.
Yeah.
But moving down the chain scales of extended stay to the mid-scale and economy extended stay, very hot.
Well, you take a look at that, and the first Everhome Suites opened in nearby Corona, California. We're in Costa Mesa right now. That was last September. The development group that did that is building, don't quote me on the numbers, but something like 12 between those and Woodspring Suites. So they're approaching it from two different price point
Yeah,
for the
and
consumer.
would spring $10 or $15 more a night than Everhome, I think.
The opposite.
Opposite.
Yeah.
Okay. Yep. All right. Sorry, Mr. Choice. Didn't mean that. A lot of stuff up here.
Yeah, for sure.
But the point being is that scaling of extended stay is definitely in play. Okay. And as we continue to look at the major franchise companies, Marriott just bought a mid-scale brand. They've never been in mid-scale before. The City Express acquisition in Mexico is something that they want to spread across the rest of the world. And they talked about it in their 4Q call. So I think mid-scale and economy continues to see expansion where that wasn't really the case at all in the last cycle. I mean, from 2010 until 2019, we didn't see much in mid-scale and extended stay or lower tiers at all. And really, even in the previous cycle, we saw a few in the previous cycle, but not much. So now, kind of as the chain scale continues to kind of look down the chain scale, we've also seen some pretty big changes in luxury and upper upscale too, Glenn. We've seen some acquisitions. Viceroy has sold. Dream Hotel Group has sold. IHG has made a couple international acquisitions with kind of resort groups. So we're going to continue to see that, okay, and continue to see some of that consolidation.
Yeah, I absolutely agree with you on that. I think it's inevitable, but on the other side, I still see that entrepreneurial spirit alive and well, and more new brands will come in to reflect that attitude as opposed to being part of the major companies, I think, as well.
Sure. It's probably not necessarily the time in the cycle that we would expect that. I would expect people to maybe do an individual unbranded hotel that they believe in the vision of. And then maybe
I get the feeling that a lot of people are saying they're starting new brands when they're referring to they're going to open one and hope that they could get traction and then do something from there.
Sure. They got to sell people on the vision. And that's what's happening inside of a lot of the companies right now, is selling on the vision, because I need cash assistance. I need equity to build hotels. I need equity to develop hotels. And there is equity. The change that we've seen in our hotel careers, Glenn, is a significant thing to mention, in that hotels was a risky investment when we got in the business.
Yeah.
Okay. Today, that's not necessarily the case. It's much more controllable. It's expanded in its chain scales. It's expanded in its knowledge. It's expanded in the efficiency of the buildings that we develop. So as a result, it continues to see more private investment, public investment coming to the hotel business that were never in the hotel business before. And so as a result, we continue to see more of this expansion in the brands and expansion of these companies. And bigger is better right now, which is evidenced by many of the acquisitions that we've seen. Choice buying Radisson, obviously, the Dream Hotel Group acquisition. We haven't talked a lot about that.
No.
Yeah. I mean, that's a great example of building to the point where you're kind of like, we need more capital.
Right. And they need that growth engine behind them, as well as tapping into the consumer base.
There is nothing negative about what the Dream brand is. And I think it will be a great acquisition for Hyatt. I think it will be a great expansion vehicle for them. And it's cool, and it's hip, and it's chic, and it's all those things that we like about the boutique space.
Yeah, absolutely. So speaking of that, you mentioned the Viceroy acquisition, which was done by Highgate.
Yep.
That to me is really interesting that particular company bought them. What do you think is their overall strategy going forward? Are they going to add more types of brands to it? Because simultaneously, they also seem to be building an internal tech stack as well. And I think all of these strategies kind of overlap with each other.
I think Highgate is a company whereby, they have existing hotels in their portfolio that could be Viceroys. Okay. They were a buyer of those types of hotels before.
Right.
Okay. Much of what they bought during the pandemic was taking advantage of leverage. Okay. They had capital. They were able to make cash acquisitions where others may not have been able to perform.
Yeah.
And as a result, that may not be a long-term hold for them, but the building a company from the bottom up there, they became select service owners and managers when they never really were before. So, they built out a company that's got some some pretty big aspirations. Okay. But that's not to say as the market changes, they wouldn't be seller of some of that real estate to fund some of the other things.
Yeah, maybe do like a cash lease back kind of strategy on
There's
that.
lots of things on the table for a company like that. It kind of goes back to when Barry Sternlicht, got out of Starwood and kind of was doing Starwood Capital the whole time. But when he got out of Starwood, kind of what he was doing, I mean, Barry got into, economy extended stay 3 different times.
Right.
Okay. And he'd never been that guy before. So there's lots of different opportunities. There's a return. There can be a return leveraged in really any place in the hotel industry if you know where to look. So, and I think the Highgate's a great example of that.
Yeah.
So the opportunity for them is probably very much in front of them, and they kind of have to decide: am I going to be all brands? Am I going to be all chain scales, or do I really want to kind of maybe separate the company into kind of a select service division and a full service division? Some of that's kind of right in front of them, and I might be talking out of school a little bit on this, but certainly I think those are conversations that are happening.
It would make sense. I mean, that's what Aimbridge does, for example.
Correct. That is very much what Aimbridge does, and that's what Allison Reed is doing at Aimbridge, kind of separating much of what they're doing, and Michael's doing that as well. And certainly, they've got a lot of wind in their sails, and 1,600 hotels are running across the world. I mean, they're running more hotels than any brand right now.
Yeah, which makes sense. And for our newer and younger viewers out there too, the business, the hotels are really the hotel brands are mostly in an asset light strategy. So mostly they're purely franchising companies. They own a few trophy properties, but not many more beyond that.
Well, they might run some of those trophy
properties. Right. They manage them, but they don't own them.
When you start talking about, a company like Marriott with so many full service brands, they run some of the biggest full service convention center, city center destinations and large resorts across the world. And that strategy still really hasn't changed, but it's maybe not something they're looking to grow.
Right.
Okay. And
that makes sense.
I mean, I would love to hear you interview Mr. Capuano about that, Glenn. But the fact is that they continue to kind of change, and keeping in mind that, Marriott had a really tough pandemic, and they got hit first because they had so many of those managed hotels where the travelers stopped coming. The CEO passed away during the pandemic. I mean, there's a lot of things to kind of get through still, and they're still doing some of that. But strong brands, strong companies, strong story, and going into mid-scale is going to be an interesting look for them to see how that plays out.
It sure is. So, both of us were all very bullish on extended stay very early on. We knew that was going to be the next big trend. I'm now looking beyond that. I'm starting to think this outdoor thing is going to really take off, with brands coming around like Field and Stream, and much more focus on glamping, and RV parks starting to add, cabins and all of that kind of stuff. Do you think that's going to be the next big thing? And if not, what do you think it'll be?
Well, my manufacturer customers tell me that's going to be the next big thing. We at Lodging Econometrics work with a number of suppliers in the industry that sell products, and they're talking to me about that stuff all the time. Keeping in mind that in America, different from all the other places in the world, hospitality is not really a green space.
Right.
It's not. We don't build green buildings in America at the rate that we do in other places of the world. We don't build environmentally friendly facilities for lodging like they do in other places in the world. And certainly that outdoor space kind of opens the door for some of that. But the suppliers want to run through that wall to do whatever they can to participate in that type of thing in America. And glamping is not a new thing.
No, it's starting to
new in
gain
America.
Traction. Like all other things during the pandemic, it accelerated that trend, and now it seems to have come to the fore much quicker than it would have otherwise.
100%. Yeah. I mean, people want to be outside, and places where they can do that, and hospitality services can be provided efficiently in that marketplace. I mean, the interest in paying $500 or $600 a night for a hospitality experience that might not be a room at the Ritz-Carlton,
right,
has continued to grow. Okay. And the experiment generation is here. Okay. The experiment generation is really Gen Y. It's somewhat Gen X. It fits us, Glenn.
Yeah.
But it's also the millennials. They would rather have the experience, and that's what they want to spend on. And I think the hotel companies are trying to pivot to figure out how to do that. And it's always the smaller companies first that find a way to sell it to the bigger companies.
And then big companies buy them.
Yeah. And that's entrepreneuring 101.
Right.
Okay. I mean, that's how it works. So certainly the outdoor space is becoming more interesting. You know, in America right now, certainly half of our country experiences pretty significant winter for a few months a year, which is not the case where glamping is a big deal. Glamping, big deal in a 4-season environment is tough. I'm not sure we've quite figured that out yet, but certainly where it is less of a severe winter season or less of a severe summer season, it's got a lot of possibilities.
Yeah. Well, I think it's going to be really exciting to follow that particular trend.
Why don't we doing a podcast about that?
Yeah. Well, check out my show with Todd Wynn Parry of Horwath from a couple of weeks ago. If you want to learn more about the outdoors trend that we think is going to take off. What else do you want to talk about?
What else do I want to talk about? I'm going to be really back on travel this year, Glenn.
Good.
I would say that I'm not sure I'm going to meet my 2019 travel agenda, but we're going to be awfully close. Really, I'm going to go international again. I've been taking one trip so far. I've probably got 2 or 3 planned for this year. Definitely going to go back to Asia this year.
Nice.
Europe a couple times. So not really restricting myself on the travel side, I think, which is something, you know, I've always said we got to lead from the front in the hotel business. We're not afraid to get out there, not afraid to do that. So I want to be part of that. But I think also it is for the listeners, the hotel industry is in a very good place. Okay. Comparatively, if you own real estate in other sectors, the hotel industry is still performing, if not outperforming, what your expectations would have been. So from an investment standpoint, there's still a lot of opportunities. We've had a few kind of deep breaths over the past 2 years in terms of a little bit of blips in the market to figure out how to get reshuffled. But I think from an investment standpoint, we will see this summer turn around quite a bit. And I think we will, as interest rates settle down, it will continue to be an investment opportunity. But if you're supplying products to hotels and you're supplying services to hotels, you have absolutely never been busier. And you're probably looking at the industry right now and saying, how should I focus my organization? And I think probably 8 out of 10 of the things that you sell today, or 8 out of 10 of the orders that you do, are probably going to be to replace product that's already there. So it's important to understand your existing install base. It's important to understand to reconnect with those customers, because those decision makers are all different. If you're a company that has sold to a person that doesn't own or manage the hotel today, you know, how am I going to connect with that person who has my product installed, who owns and manages the hotel today? And how do I understand what their portfolio looks like and how we're installed? That is exactly what Lodging Econometrics does on a very regular basis for our clients. And we'd love to help you.
And how do we find you, Bruce?
LodgingEconometrics.com, Bruce at LodgingEconometrics.com. We're on Facebook. We're on Twitter. We're on LinkedIn as well. So we have regular press releases, but we also have a significant amount of information about the current status of the industry available online in press release format. And if we can assist you, we can do a plan. We'd love to hear from you.
Beautiful. Well, thanks for being here, man.
Great to see you, Glenn. Let's have a good couple of days here at Click. And I look forward to delivering the keynote on Thursday morning.
Yeah, it should be fun. And I'll be doing the hotel refuel panel talking about food and beverage. So, I'm going to enjoy doing that.
Refuel.
And for you, if you want to refuel on your industry information, be sure to follow us on Apple Podcasts, iHeartRadio, Stitcher, SoundCloud, wherever you get your shows. Well, we are there. And if you're watching us, if you're listening to us right now, why not watch us? Find us on LinkedIn, Facebook, and YouTube. And of course, all shows are housed at NoVacancyNews.com. So for me, Glenn Hausman and Bruce Ford, remember, you've got one life, so blaze on. As Anthony would say, be kind to yourself. See you later.